Hey everyone, welcome back. Hope you guys are having a great Tuesday. Thanks for coming in and watching this video. We got a couple things we got to go over. So we're going to go over Argo, Digital, Hut8, and Stronghold for their quarterly results. And we also have some news from Hive. They're buying some more miners. And they have a plan to transition their current fleet to be more efficient, to get down to like 23 joules per terahash by the time of having events. So we'll take a look at all of that, okay? But as always, you guys know the drill here. Not financial advice, for entertainment only. Please do your own research. And I'm investing in following coins and companies for full disclosure. And we'll take a look at first what happened today with Bitcoin, and then the miners, obviously, what happened as well. And we'll get into the other news that we do have here. It's going to be a little bit long video. Chapter's going to be down below, as always. So I do appreciate it. And let's get into it here. So here's Bitcoin right now. Bitcoin was down quite a bit here today. It was down approximately 2.53%. However, the miners, for the most part, we're kind of mixed a little bit here today. The miners, some were actually up quite a bit here. Bitdeer was up huge today. It was up 32%, and that's based on them reporting their financial results yesterday, which were really good. It showed investors that they're quite profitable on some of the other business segments that they have as far as hosting, managed hosting, all that other stuff that they have in there. That I'm questioning it though. Right now, I don't know if the numbers are for their full amount that they're getting for it, not including potentially the amounts they have to pay into their customers, basically. I got to do some more research into that. So I'm waiting for them to report their kind of official 10K results, right, where they go into explanation of how things are brought up. But we'll take a look at it. If there's anything different from what I saw earlier, yesterday's video, I'll do a video on it and let you guys know what I find, okay? But we can see here that Digital was up today quite a bit. Here was up 6%. Bitdeer was up 32%, like I said, so that had a great bounce. Bitfarms was up another 2.68%. CleanSpark was up 1.05%. We had some miners that were down. DigiHost was down another 9%. Hut8 was 9% down based on the results they were provided here. And then we had Mawson was down 4%. We had Soluna up 2%. Who else? And then others were down 4% as well. Some a little bit less, 2%, 3%. Some were just flat on the day. So it was definitely an interesting day on the miners, and we'll see how things progress going forward. We'll see if Bitcoin actually bounces over here. This could be just a little reprieve that we're having with Bitcoin right now. The RSI on the daily has come down below the 70 mark, which is great news to see. Also on the 4-hour chart, we pretty much bottomed out here below 30. So that means it's kind of oversold here right now. We may see it push back up. 1 hour, same thing. We've been seeing that, but it was below the 30 mark here once, twice, and it kept going down lower. So we'll see if we get a little bit of a reversal on that. Okay, something to keep an eye on. All right, let's take a look at the news stories that we do have here. First one's going to be on Hive. So Hive Digital announces purchase of 4,800 Bitmain S19K Pro ASIC miners and provides strategic update. I had to actually look up these miners here to see what they were actually, what their hash rate is, what their watts were, because Hive didn't provide that information, nor did they provide how much they actually paid for them here, which was unfortunate. So we really don't know how much they paid for them. But here's what we do have here. So Hive has purchased 4,800 Bitmain S19K Pro ASIC miners for expected delivery within 30 days, which will allow us to upgrade a portion of our fleet to improve our average joules per terahash efficiency. So this is good. They do have a lot of miners, and with them trying to get to 23 joules per terahash on average, that's going to be a lot of miners being swapped out here. So their goal is to upgrade their remaining 38 joules per terahash miners to 23 joules per terahash miners before the halving, which is expected to be in late April 2024. Okay, so when I first read this, I read this wrong. I thought they were trying to get from the 38 joules on average they have right now, it's actually a little bit less, to 23. So it looks like they're only looking to get rid of some of the miners that are 38 joules per terahash. That's still going to be a significant amount. Okay, the lower the joules per terahash means, the greater the machine efficiency. Our strategy is to upgrade monthly with new ASIC machines, which are available for rapid delivery with attractive dollars per terahash prices. Hive is making good strides towards this goal. So you guys can read everything else here that they want to get through, right? What they've already bought, things like that. You guys can read that on your own time. But I thought those kind of things were a little bit interesting. And if we look at Hive here on my numbers, and I feel like I'm going to have a cough here. Excuse me. If we look at the numbers here, they're saying 38 joules per terahash. I don't see any here that are really 38. I see a bunch of them that are 34. So maybe my numbers here as far as what the watts are on some of these miners might be off. So we can just take a look at basically the ones that are 34 or more, or even 36 here. But that's still, I mean, you can see here, that's still a huge number of miners that are going to be having to be swapped out here, it looks like. if we count all the numbers here, it's going to be a bit here. Excuse me. My throat is dry. Probably from all the talking in yesterday's video. Let's take a look at it here. So if we just count these up here, what do we actually end up getting here as far as how many miners they will have to replace? These older ones, I'm guessing are already replaced, but here's what we have. So we got about 15,000 miners that they have to change out that are above 34, 36, 35, and some of them. So pretty much a majority of them. We still have one here that's 35. So now we're looking at 17,000 miners potentially right now. Okay, that's a lot. And they did not provide any updates as far as growing their hash rate. It looks like they just want to swap out what they do have, which should help them also increase their hash rate at the same time, but not significantly or not by a large amount. Okay, a lot of these miners are like the 98 terahash miners, so they might be increasing their hash rate overall by about 20 to 30%, something like that, maybe a little higher than that, depending on which miners they buy. Okay, so we're kind of looking between maybe 30 and 50% increase in the hash rate. Just swapping these miners out alone will help them out with that. Okay, nonetheless, I think this is good. This is a good way to do it. Still would like to see them grow even more beyond where they're going to be here over, what are they at right now? 4 exahash, maybe a little bit higher than that, but that's it. Okay, just want to point that out. Let's get into the next one here really quick. So Argo announces their Q3 2023 results, which I'm happy to see. I thought they were going to hold off and report their, I think it's going to be their H1 or their H2 for half year results. So I was happy to see this, that they are providing this for the investors, which is good. And we look down here, some quick tidbits on it. So accrued 4.4 million in power credits from economic curtailment at Helios during periods of high electricity prices. This was probably during August timeframe, maybe a little bit in September as well, which led to an increase in mining margin from 36% in Q2 of 2023 to 58% in Q3 2023 when the credits are applied. So that's good there. They decreased their average direct cost per Bitcoin mined by 33% from 17.5 thousand per Bitcoin in Q2 to 11,000.7 per Bitcoin in Q3, and that's if you apply the credits to it. Okay, without the credits, it was closer to, gosh, what was it, like 23? I think I read the numbers. It was like right around 23,000. So if the credits, I doubt the credits will continue going this high. We saw this with Riot also. Riot had like 30 some odd million in credits because of how much they curtailed. We will probably not see that going into the winter months, but we'll see. So I think that number's gonna be a little bit higher going into obviously Q3 or Q4 that we're in right now. Reduced recurring non-mining operating expenses by 11% in Q3, so that's good compared to the prior quarter, and then achieved a positive adjusted EBITDA of 3.1 million for the quarter. That's also good. They still lost money overall if you include all the non-cash expenses as well. Okay, and then let's see what else here. They reduced their debt owed to Galaxy Digital from 32 million to 27 million, so they paid off about 5 million in that, and ended the quarter with 70 million of debt outstanding. That's still a lot for them. They're at 2.8 exahash right now, I believe, with everything that they have installed. And they did state down here we go. The company is involved in advanced discussions to sell certain non-core assets, and it continues to evaluate options for further reducing debt. So they're cash strapped. They're in trouble, you could say. And they're looking for ways to get out of it, obviously. Okay. So let's take a look at the numbers that I do have for them, and we'll get on to the next one here. So Argo, this stock price is old. I didn't update this today yet. Didn't have time. I was busy updating all the numbers for all these miners here. So I'll get that updated later on this week, or maybe I'll even do it after work, or not after work, after this video. All right. So shares outstanding is at 58 million right now. That's estimated based on what they reported on their financials. And they're currently at 2.8 exahash. Their performance over the last 4 weeks has been actually kind of positive here. They're up 13.9 from 12 weeks ago. From 8 weeks ago, they're up 10%. From 4 weeks ago, they're up 22%. And then obviously last week, they were down 4%. Their Bitcoin HODL has been decreasing here month over month, it looks like, for the most part. They were stacking a little bit here in July and August, but that has continued to decrease, and it's getting pretty low there. Their BTC production also is kind of up and down here in the 100s range for each month. They bottomed out in August at 105, and they were up to 136 in September, up 143. That's with them curtailing less, right? So that's helping them out there. The amount that they've been selling, you can see quite a few months here where they're actually selling more than what they actually mined. And that means that they are cash strapped, trying to pay off debt and things like that. Let's see here. Hash rate, we talked about that. Let's go down here. So last 4 quarters revenue. Revenue has been coming down here. Q3 was at 10.4 million. Prior quarter was at 12.5, but they did get the power credits of 4 million, so that actually helps them out with profitability. And then the current quarter that we're in, we're estimating about 13 million if all things go the way they are going currently. Last 4 quarters operating costs, this does not include depreciation, has been coming down to recent low that we have here at 4.34 million. We had a pretty high in Q2 of 8 million. So that's a nice decrease there, something we want to see. You can see the cost to mine minus depreciation, and I have plus credits in here. That's with credits being applied here. They're 11.7 Bitcoin mined each quarter. And then obviously we have Q3 and Q4 here when they reported the half-year numbers for that. But overall, it has been coming down here, and that's mainly because of the lack of growth, right? Network hash rate continues to increase, resulting in fewer and fewer Bitcoins being able to be mined by them. Excuse me. Debt to equity, lower is better. I'm getting a negative number here for the second quarter here, it looks like. And then the current ratio, higher is better, has improved a little bit here on that one. Total current assets, that has increased a little bit here to 16.16 million from the 13.54 that they had. And total current liabilities actually decreased just slightly here by several $100,000 to 27.36 million. So that's actually a slight improvement. Nonetheless, it is an improvement, which is good to see there for them. Okay. Now, we'll get down to the numbers here. We'll get into all of these metrics here in a second. We'll take a look at the current assets. Current assets actually increased from Q2, which was 13.5 to 16.1. That's good. Going down here, non-current assets also actually decreased to 67 million from 75 million. But the total assets did decrease a little bit here to 84 million from 88 million. Now, current liabilities went actually, let's see here, 27... It actually went up a little bit here. 27.3 from 27 point... Oh, no, it actually went down a little bit. 27.3 from 27.7, so about 400,000 less. Total liabilities actually went down here to 86 million from 91 million. So that's good there. Stockholder equity and liabilities actually went down to 84 million from 88 million. Revenues, we already talked about that, how that has come down here. From the 12.5 that they had in Q2 down to 10.4. And then obviously the direct costs have been coming down, and that's based on the credits here. So the 4.4 million in credits that they got. Self-mining, let me see here. This was the direct cost of self-mining was 8.7, so you're getting basically half of that, which was pretty good. That's how they got the better margins on it. Operating expenses also came down here about 800,000, which is good to see, right? Trim the fat, get rid of it as much as you can. Let's see what else do we have here. Operating expenses, trying to see if there's anything else. Finance costs did come down here a little bit here, but to 2.7 million from 3 million. So that's good. And then let's see here. Total income or net income loss per share was 2 cents compared to 3 cents. So that's actually pretty good there. And yeah, we'll have to see how things go forward for them. So going back up here to the numbers that we do have for them. See, cost to mine, one Bitcoin, we talked about that at 11,000 here. If we add the credits in there, like I said, it was like around 23,000. And then you got the debt to equity current ratio. We talked about that value. Book value of equity assets is at 56 million. Price to book ratio is 3.1. Enterprise value is at 63 million. A beta, I have them at negative 769. They're staying positive. I'm probably not including the tax credits in there on top of that, which would obviously give them a positive here. And then the revenue compared to general administrative costs is still really high, 38%. Need to see that below 20% for them and anybody really in general. Okay. So obviously they're in a world of hurt right now, trying to get out of this mess that they got themselves into. They have been doing the right things, but is it going to be enough to survive the halving event come next year? Time will only tell. The debt is obviously a concern there for them, as with anybody that has quite a bit of debt. And then also not growing really, so that's also a concern. So based on the numbers, I have them between $2.05 to $3.07. They're at $1.09. I would say they're undervalued, but it's understandable why they are undervalued because of the debt and concern of them going forward, right? You're either going to have to dilute or take on debt, which obviously they don't want to do. And right now, it's not probably the best time to dilute shares with the stock being priced at $1.09 as it is. Okay? Let me know what you guys think of this one, and let's get into the next one here. The next one's going to be on Bit Digital. So Bit Digital Inc. announces third quarter of fiscal year 2023 financial results. There really isn't anything interesting in here other than these two things. So the company paid approximately 6 cents per kilowatt hour to its hosting partners for electricity consumed during the quarter. That's actually not too bad for having your machines hosted. And then the average fleet efficiency for the active fleet was approximately 29.2 joules per terahash during the third quarter, which is also pretty good. They're at least below the 30 joules per terahash, which is kind of where we want the miners to be before the halving event. So overall, that's not too bad there. You guys can read the rest of the stuff here. And we'll take a look at Bit Digital here right now. So Bit Digital right now has about 90 million shares outstanding. And I believe that is as of Q3. Yes, that is as of Q3 here. Stock price, like I said, is old from yesterday. Stock price, their market cap is about 178 million roughly. Their performance over the last 12 weeks is kind of mixed. It's actually down. It looks like they're down 10% from 12 weeks ago, up just 0.5% from 8 weeks ago, 1% from 4 weeks ago, and from last week, they're actually down 9%, almost 10% on that one. You can also see that their hash rate right now is at 2. They have about, I think they have enough machines to get to like 4 exahash, but for whatever reason, they're not installed. I don't know if they're older machines or what, but those are not operating right now. And they're actually a little bit less than that because they are moving machines out. They're also having required maintenance at one of the facilities that they're hosting. So that's also down a little bit, but normally they're around 2 exahash. BTC production, you can see, has been up and down here. Their best month was actually last year in October of 152 Bitcoin. It was kind of coming down here through April of this year. And then they went back up here through August to 139.9. And they've been coming down here in September and October of this year. BTC HODL has been up and down as well. It all depends on when they're buying miners or needing cash. That's when they usually sell the Bitcoins. They're down to 511 here as of October. Going down here, hash rate. You can see hash rate has been coming down, but has increased here over the last 5 months, it looks like, and it's been kind of flat here the last 3 months. Bitcoin revenue also peaked here in July for them, so you can see that. And then the last 4 quarters revenue has been increasing, which is good to see. The current quarter that we're in, I'm estimating about 11.6, which is going to be a little bit higher than the 11.5, unless they get more miners installed, or if the miners are not plugged in long enough, we might be coming down on that. But we'll see, obviously, when we get the numbers for November, which we're in right now, and then December as well. Then the last 4 quarters operating costs, those have been increasing as well, which don't really like to see that. But they have been increasing their hash rate, which is the reason possibly for this as well. All right, cost to mine 1 Bitcoin minus depreciation, we're looking at $21,000. For them, prior quarter was at 17. Network hash rate has been increasing, which is obviously going to result in the higher cost. Bitcoin mine quarterly had a nice increase here in Q3 to 403 compared to 318 in Q2. Their debt to equity has also been kind of up and down as well. They're currently at 0.05, lower is better, so that's really good. And their current ratio is obviously higher, better, is at 29 right now. So that's actually pretty good. They're financially healthy going into the halving event. Total current assets of 66.46 million. Total current liabilities of 2.24 million. All right. Pretty good there. That's actually really good. All right. Going down here, we'll get into those metrics up here in a little bit. Current assets actually increased to 66 million from 56. So that's good there. That's about 10 million increase. Total assets also increased by about 8 million to 108 from 100 million. So that's good there. Total current liabilities went down, so it looks like the big thing that they paid off was other payables and accrued liabilities, down to 1 million from 4 million here, and a little bit of payment here as well on the accounts payable here went down a little bit. Okay, total liabilities is down to 5.4 from 8.6, so that's good there. And then total liabilities and stockholder equity is up to 108 million from 100 million, so that's good. Revenues increased like we talked about. Expenses increased. Their hash rate has increased, so that's reasonable there. General administrative is down, which is good to see, to 4.8 from the 5.3 that we had here prior quarter. Cost of revenue depreciation, gross profit minus depreciation is at 23%, so that's down from the 37% that they had in Q2. Operating expenses, let's see here, impairment of digital assets, that kind of increased a little bit here, but that's up quite a bit here to 7 million. What actually changed here? That went up quite a bit here. Main thing was probably going to be the cost of revenue here. That was the main increase, more or less, plus the impairment of digital assets added to that. Okay, let's see here. So net income before tax was negative 7 million compared to negative 2 million. So they actually ended up losing more here. And if we take out, so that was 8 cents loss per share compared to a 3 cent loss per share. And if we take out depreciation from this, we're looking at negative 4 cents loss compared to a 2 cents gain here prior quarter. Okay, so that's kind of not good. Overall, like we talked about prior, their cost to mine one Bitcoin is at 21,000. Debt to equity current ratio, we covered that. Book to value is 103. Price to book ratio is 1.73. Enterprise value is 152 million. A beta negative 3.5 million. EV to a beta is negative 42. And then general and administrative compensation here based on their revenue of 11.5 million, and their general and administrative compensation was 4.8 million. So that's 42%. If they cut that down, I mean, most of their machines are hosted anyways with partners, so they really only need like office staff, right? Why is that so high on that side of things? It should be much lower on, I would think it should be much lower. If you're making good money when Bitcoin's going up, you can give yourself bonuses, but in the short term, when we're kind of in a pinch here to squeeze out profits, I would think the general administrative compensation part of it would be lower, probably around 2 million or something like that per quarter, or maybe even 2.5, something like that would be even okay at that point, depending on how many people you have. But you shouldn't have that many people. You only really need an accountant, a CEO, somebody to purchase things. What else do you really need? You're buying machines and you're sending them off to places to get hosted. So I don't know. That's just my take on it. Let me know what you guys think, okay? So that's it for Bit Digital. I think they're going to be fine going into the Halving event. They obviously have plenty of cash. I'm not too worried about them going into it, but they need to grow like everybody else here. And we'll see how they do. All right, let me know in the comments. All right, next is going to be Hut8 here. So Hut8 reports operating and financial results for Q3. And I don't think I highlighted anything here. It's all the same here. They did report, obviously their revenue is down quite a bit here from last year. So revenue decreased by 14.7 million to 17 million during the quarter ended September, compared to 31.7 million during the quarter ended in September 30th of last year. And that's mainly because, one, they're no longer mining Ethereum. That went to proof of stake. The other thing is they've had issues with facilities, with machines, with leases. It was just a bad year for them all around this year. And that's why the stock is down today, unfortunately, because of it. When we'll see how USBTC shareholders vote on the merger, because they haven't voted yet. It would be actually quite shocking and surprising if they didn't vote for the merger, because USBTC seems like they've been doing pretty well here recently, gaining, I believe, the Celsius bid as well and things like that. So it'd be kind of interesting if they actually voted against it. That would be like a stick to the heart, I think, of Hut8 a little bit here. It would definitely drag them down quite a bit, and they would need to definitely reposition themselves on how to go forward on it. But let's take a look at the numbers that I do have for them, and then we'll get into also Stronghold. So Hut8 has 221 million shares outstanding as of Q3 reported. Stock price as of yesterday was $2.03. They're down, obviously, what, 8%, 9%, something like that. So they're down to $1.80 or something like that. Market cap is obviously going to be less than that. It's going to be around 400 some million right now. Their performance over the last 12 weeks has been, actually, if you look, it's kind of mixed. They're down 4% from 12 weeks. They're up 14 from 8 weeks. They're up 16 from 4 weeks ago, and they're down last week from 8. So it's kind of mixed a little bit here. Monthly BTC production here, you can see it has been coming down. And the reason it has been coming down is the curtailment they've been doing, the problem with the miners that they're having, the Drumheller, and then North Bay as well. So it's been coming down. That's not a good thing to have, especially as you're going into the Halving event. They have been also selling some Bitcoin here. This year, they didn't sell any, I don't think, last year. They were diluting like crazy just to keep everything afloat last year. Bitcoin HODL, though, they still have a huge HODL here of 9,113 as of October. They have sold quite a bit here through August, September, October, reported in October numbers on that. That's why we have a huge decrease here in Bitcoin on that one. Their also revenue or hash rate, you can see, has been pretty flat here, 2.6 roughly. Monthly revenue has been kind of up and down. Their best month was obviously last year in October. This year in October, they were at 3.31. Obviously, quite a sizable decrease there, even though Bitcoin has gone up. They just haven't been performing that well on it. Okay, last 4 quarters revenue has been coming down also. Not a good sign there. I'm estimating them to be about 10.6. We'll see if we get there. Last 4 quarters operating cost minus depreciation has been coming down, which is good to see as well. So that's actually a good sign there. Cost to mine 1 Bitcoin minus depreciation did come down here in Q3 to 21 from 23, so that's good. Bitcoin mine quarterly has been coming down. Don't like seeing that. They're obviously not keeping up with the network hash rate. Debt to equity, lower better. They're at 0.24, still really good. Current ratio has been coming down here to 4.6. They have been using cash and things like that to fund operations, grow and things like that, and also put in bids to take on Validus properties that they're trying to get to buy out, basically. Total current assets in Canadian, this is 379 million. Total current liabilities in Canadian, 82 million. So plenty of cash there. They're going to be fine. Obviously, with that going down here, we'll look at that later. Current assets actually, let's see, decreased a little bit here to 379 million from 403 million. Total assets went down to 496 from 557 million. Main one here is property, plant, and equipment went down quite a bit. What else went down quite a bit? Deposits and prepaid expenses, that went down as well. Intangible assets stayed by the same. What do we have here as far as digital assets? Digital assets went down quite a bit here. Almost, what is that, 90 million or so? That went down. That's definitely a lot there. And then digital assets pledged as collateral, that went up to 276. So it kind of went from here to there. And deposits and prepaid actually went up as well on some things as well. Okay. Down here, liabilities. Liabilities actually increased to 82 million from 57 million. Big difference here was the loans payable increased about double. And then total liabilities went up to 99 million from 86 million. We had a decrease here on non-current lease liabilities to 12.9 from the 21. And non-current loan payments went down to 4 million from 7.3. And then total liabilities and stakeholder equity went down to 486 from 557 million. Okay. Revenue, like we said, went down. Their self-mining, high-performance mining was 4.5 million here in the quarter, which is up from the 4.2 that they had the prior quarter. So that's good. High-performance computing accounted for about 26% of that. Cost of self-mining estimated. So this is I'm estimating about 9.7. It might be a little bit more than that. Usually the high-performance computing don't use as much electricity as the Bitcoin miners do. So that might be actually a little bit on the low end here. I'm just using the 26% mark and trying to figure out what the cost of that would be for the self-mining there. Depreciation, don't really care about that. Cost of revenue was 21 million in total. That includes depreciation as well. Their gross profit minus depreciation was 33%. So that was actually up here from the 25%. So that's kind of good there, at least on that side of things. Selling, general, administrative. So here's everything that's broken down into share-based payments. About the same that they had prior quarter. Salary, about the same as well. Insurance, about the same. General, marketing, sales, that's the same. Sales tax, about the same. Professional fees went down a little bit here. Investor relations and regulatory, down a little bit. So overall, it's down a little bit here, not much. 8.7 million from the 9.1 million. It's down, but it's still down, so that's good there. Cost of revenue, let's see here, minus depreciation was 20 million, looks like. And then net income before tax was negative 40 million. So that's a huge loss there compared to Q2 of negative 18 million. And then total comprehensive income was negative 76 million. What did we get here that was dragging it way down? Let's see here. Loss on revaluation of digital assets was down 10 million. Also, revaluation loss gain on digital assets net of tax was 22 million down. So that definitely dragged it down there quite a bit. And that's why I think the stock did what it did today. So overall, per share, they lost 24 cents. And if you take out depreciation, we're at actually down 25. Looks like we're down 25 cents. So that's kind of what we're looking at. Okay. Going up here. Cost of mine one Bitcoin did decrease, like I said, to 21,000 from 23,000. Debt to equity, current ratio, we covered that already. Book value of equity, 397 million. Price to book value ratio is 1.133. Enterprise value 212. EBITDA was negative 27. EV to EBITDA negative 7.68. Okay, and then when we look at revenue and general administrative costs, that's high. Revenue was 16.9 million roughly. Their general administrative expenses was 11.9 million. That's 70% of their income. That's crazy, crazy out there. They need to get that down or start generating more revenue. Trim the fat. Unfortunately, sometimes you got to do that. Things get a little hard. You got to trim the fat around the office, around other places to bring that down. Especially when they merge with USBTC. I mean, you're going to have double everything. You're going to have to do something to trim the fat around there, I would think. Okay, so that's kind of where we stand. I don't see any problem with them going to the Halving event. Obviously, they got plenty of cash. That's going to save them, but they definitely need to grow. They need to merge with USBTC to kind of save their butts a little bit. And then see if they can buy out those facilities from Validus as well. That will help them grow even more. So they're on kind of the right track. It's just this past year has been terrible for them. All right, so that's it. Let me know what you guys think of that one. And let's get into next one here. Next one's going to be on Stronghold. So Stronghold announces third quarter 2023 operating and financial results and launches carbon capture initiative. This kind of actually piqued my interest a little bit here. It's like we see people talking about capturing the carbon that's in the air and things like that. Thought this was kind of interesting. You guys can read over it, but here's what they're saying. Stronghold's beneficial use ash can capture carbon dioxide. They're saying it's like 12% by weight is what they can capture. Starting ash, right? Initial phase of carbon capture project underway at the Scrubgrass plant. So that's kind of also interesting there. They expected to finish field testing by the end of December, looks like, of this year. And they're also reiterating Q4 2023 hash rate guidance. The company is committed to Bitcoin mining and expects at least 20% sequential growth in hash rate going into the fourth quarter of 2023. Okay, so everything else past that is kind of a rehash of what we already covered on them in the past. So I'm not going to get into it. If you guys want to read that, you guys are more than welcome to. But the big thing is obviously the balance sheet for them. So let's take a look at that, what we do have on them, and then we'll call it a day. So another long video here. So shares right now is at 7.9 million, sorry. Their market cap is a little bit less than probably 30 million. I think the stock price was actually down today if we look at it. So this is yesterday's stock price. The performance over the last 12 weeks has been pretty bad. They're at down 30% from 12 weeks ago, down 7% from 8 weeks ago, down 7% from 4 weeks ago, and they were down 14% from 1 week ago. So not a good sign there. BTC production has also been kind of up and down here. They're currently at 4 exahash. They have by 20%, so that would be a growth of getting them to about, 5 exahash possibly by the end of the year, which would be still really good growth for them if they could do it. Now, like I said, BTC production has been kind of up and down here. On average, it probably averages, probably 195 Bitcoins per month or so on average. Since we started tracking. Before that, they weren't providing production updates. As of last year, sometime they stopped doing that when they got into trouble financially, had to return miners and things like that. Let's see here. BTC sold. You can see that they pretty much sell everything. Hash rate, slight growth here, obviously, in the last couple months, which is nice. Bitcoin mined revenue has been coming down as well. That's not a good sign there. What else do we have here? Last 4 quarters revenue, this is just for self-mining, has been kind of flat here, about 17 million here overall, 17 point something million. The last 4 quarters operating costs have been kind of up and down, but coming down here a little bit. Looks like the second part of the year seems to be almost better for them than the first part of the year. It looks like, at least this way. It's kind of mixed a little bit here. Or at least like the fall and winter times are better for them as far as costs are concerned. All right, Q3 is usually, that's kind of late spring, late fall, or late summer, early fall. It's hard to tell, but it's been jumping up and down, which is kind of strange. I don't know what the reason for that is, or if it's something that's cyclical going for them. All right, cost to mine 1 Bitcoin mine's depreciation did come down to 25,000, which is good because they were at 30,000 here. Bitcoin mine quarterly includes hosting. This was 620, so they're kind of right around 620, it looks like, over the last few quarters. Debt to equity lower is better. That has been coming up, which is not good. Current ratio higher is better. That has been coming down, which is also not good, which is possibly why the stock is down the way it is. Total current assets, 12.3 million. Total current liabilities, 28 million. Not a good sign there, obviously. Going down here, we can take a look at their current assets. Has decreased to 12 million from 17 million, and that has been coming down here ever since, looks like Q3 of 2022. You can see each quarter it's coming down in value there. Total assets also has been coming down as well. They're at 172 million here compared to 187 million in the prior quarter. And that's been coming down ever since Q2 of 2022 as well. They had 355 million total assets then. It's just been coming down as well. Total current liabilities has been coming down here, which is good to see. They're down to 28 million here right now. So that's good. They were at 144 million at Q2 of last year. Total liabilities has been coming down as well, which is nice to see. They're at 93 million now for that, but still obviously way up there. And then total equity for the shareholders is 172 million compared to 187, so that's come down here. Revenue, like I said, revenue has been kind of flat all over the place. Energy has been kind of all over the place here. You can see in Q3 they made quite a bit on energy of last year, 11 million. This year around it's only 1.2 million. So definitely a big hit there. Cryptocurrency hosting has been increasing here as we go into it. So that's good there. That's helping them out. Cryptocurrency mining has been kind of going down, unfortunately, it looks like so far. Should be going up because Bitcoin price is going up in value, so that Q3 result should have been a little bit better here. But we'll see. Let's see what else here. Calculate crypto mining expenses. This is what I'm kind of calculating what their expenses are. 15.8 million on that. Let's see, percentage of self-mining to revenue, 71%, based on all the information that we do have here. Their big cost is fuel. So they spent 8.5 million in Q3 of this year compared to 6.2 in Q2. Operating maintenance costs, that actually went down to 6.9, so that's good from the 8.8. So that has been coming down, which is good to see. Obviously, the fuel part is the big one here. Depreciation, don't care about that. General administrative, let's see, where's that at? That's come down to 6.5 from the 10 million here. So that's the lowest we've seen here in the last couple of quarters. So that's good. They're trimming some of the fat around there, it looks like, which is good to see. So they're trying to do the right things to get out of the trouble that they're in. But is it going to be enough? I just don't know. Interest expense here. Let's see, what else do we have here? Total other income was negative 2.6 instead of a gain of 3.8. Here it looks like. And then net loss attributable to common stockholders was negative 17 million instead of the negative 8 million here in Q2. Okay, so they lost $2.26 per share compared to a $1.35 loss in Q2. That has been increasing here, it looks like, ever since Q4 of 2022, which is not a good sign, right? They're losing more money even though they're mining more, and so it's a tough battle to be in. Minus depreciation, if we take out depreciation, they're only down 99 cents per share on that. All right, going up here, if we look at the cost to mine, that's the reason why they're having such a hard time. It's, man, that's expensive, $25,000 per Bitcoin. That hurts. They got to get that down lower. I don't know how they're going to do that, but they got to get it lower. Also, here, what do we have here? Enterprise value here, that's 53 million right now. Current ratio, we talked about that. Book value of equities is at 78. Price to book ratio, got 0 on here. Enterprise value is negative 68. Beta is negative 5 million. EV to beta 13.7. And then obviously here, take a look at this. Revenue was 12.6. General administrative compensation was 6.5. It's come down here from Q2 to 52%. Q2 was 73%, but still really, really high. You need to get that down. I know they have operations for the plant and everything else, but man, that is high. They got to get that really under control and get that down much lower. You can see here that in Q2 of last year, they were at 37%, and then it kind of rose up in Q3, down in Q4 a little bit, up in Q1, up in Q2 again, and then obviously in Q3 down here. So that's kind of where we're stacking up things. And based on what I'm seeing here, man, it's going to be hard for them to really get through the halving event, I think. Just looking at their current assets, total current liabilities that they do have, I don't even know if they're cash flow positive. It doesn't even look like they're cash flow positive right now. So, and then how much did they dilute here? They diluted a little bit. They diluted about 600,000 shares, it looks like right now, since last quarter. So we'll have to see, right? We'll have to see where things go. If Bitcoin goes really well up high, obviously that's going to help them and everybody else that's kind of in trouble here. But it all depends on if we get the spot Bitcoin ETF or not, right? There's a lot of variables that are happening there. Where does the network hash rate go in the interim term? Does that skyrocket still with miners changing out older miners, getting new miners? And it's, yeah, a lot of things to follow there. Right. And as always, this is going to be available to my Patreon members. So thank you to everyone there for their continued support. That is still available to you guys if you guys want to have access to all the spreadsheets that I have here. I mean, you guys see here, I have like 30 some sheets here for all the miners and the metrics that we do and everything else. That's $5 a month. And we have a private Discord channel as well. Great conversations happening there about the miners, other stocks in the Bitcoin mining space as well, other trade options. So it's a great community there. So I highly recommend you guys joining if you want to have access to all this stuff. Other than that, you get it all for free here. Okay. So that's it. We'll see what happens later on this week. And what are we in? We're in Tuesday now. So we still have Wednesday, Thursday, Friday. We're still missing a couple more that need to report their quarterly results. We're still waiting on DigiHost and a couple other ones. I think DigiHost reported theirs, but I'm waiting for the actual numbers to come in through either Setter or the SEC. Okay. Once I get those in, we'll talk about that possibly tomorrow. Okay, so that's it. Hope you guys enjoyed. If you did, hit the like button, subscribe. Helps me out tremendously. I do appreciate you guys watching, spending the time here. Or you could be watching TV instead. But at least here you learned something. So I hope you guys learned something, and we'll see what happens tomorrow. Until then, I hope you guys have a wonderful evening, night, and I'll see you guys tomorrow. Bye.